somewhere in your portfolio right now, there's a good chance you already own a piece of SpaceX. Not because you decided to, not because you looked at the balance sheet and said, yes, this is worth my money. You own it because the mechanics of the market made that decision for you, and most people watching this video have no idea it happened. On June 12th, SpaceX priced its shares at $135 and stepped onto the NASDAQ in the biggest IPO in history, raising $75 billion before underwriters exercised their over-allotment. Within a week, the stock had climbed so fast that the company was valued at nearly $2.2 trillion, about 22% above its IPO price. That's not a company going public. That's a shift in the gravitational center of the entire market. And if you have a retirement account, you're already being pulled toward it. Yahoo Finance, Think Markets. Here's what almost nobody tells you about this moment. The story you're being sold is that SpaceX going public is a triumph. Elon Musk's rockets finally open to the everyday investor, a once-in-a-generation chance to own a piece of the future. And that story isn't false. It's just incomplete, because underneath the headline number is a business that doesn't actually look like the one people think they're buying. Ask most people what SpaceX is worth $2 trillion for, and they'll say rockets, Mars, the future of space travel. But that's not where the money comes from. And the gap between what people believe they're buying and what they're actually buying is exactly where this story gets uncomfortable. Let's start with the part that's real because it deserves credit. Starlink accounted for roughly 61% of SpaceX's total revenue in 2025, generating $11.4 billion, up about 50% from the year before, and by the start of 2026, it had grown to 10.3 million customers across 164 countries, producing about $4.4 billion in operating income as the company's only profitable segment. That's not hype. That's a satellite internet company scaling faster than almost anything in telecom history, and it's genuinely the engine keeping the rest of the business alive. If SpaceX were just Starlink, this would be a very different video. But SpaceX isn't just Starlink. In February of this year, the company folded in Musk's AI venture, completing its acquisition of xAI and making AI operations a third major segment of the business. And this is where the valuation starts asking questions it can't answer, because layering a cash-burning AI lab onto a rocket company and a telecom company doesn't just diversify the business. It changes what you're actually being asked to trust. You're no longer betting on Starlink's growth curve. You're betting on three separate stories, all being true at once, and the market priced all three as if they were guaranteed to work. CNBC. This is the part where most creators would just call the stock overpriced and move on. But that misses the actual mechanism, the part that should worry you more than any single valuation number, because even the professionals who study this stuff for a living are flagging it. Morningstar's own discounted cash flow valuation put SpaceX at roughly $780 billion, about 48% below its private market valuation, and their analysts went further, warning that xAI poses a material threat of value destruction to the company, calling its economic moat indeterminate. Read that again. The people whose entire job is estimating what a company is actually worth looked at SpaceX and said it's worth less than half of what it's trading for, and the stock went up anyway. CNBC. So if the fundamentals don't support the price, what does? This is the question that actually matters, and it's the one almost nobody is asking out loud. Because a $2 trillion valuation doesn't hold itself up through belief alone. Somebody has to be buying continuously, regardless of whether the price makes sense. And that's not retail investors making individual choices about whether they like the company. It's something quieter and far more automatic. Every major index, the S&P 500, the NASDAQ 100, isn't just a list of successful companies. It's a machine. Once a stock is added to one of these indices, hundreds of billions of dollars in passive funds are legally obligated to buy it, whether the fund manager thinks it's a good investment or not. That's the entire premise of index investing. You're not picking stocks, the index is picking them for you, and your 401k just follows along. It's the reason passive investing was sold to an entire generation as the smart, hands-off way to build wealth. Low fees, no emotional decisions, just buy the market and let time do the work. But here's the part of that pitch nobody says out loud. The same mechanism that quietly buys the whole market for you also buys whatever gets added to that market without asking your permission and without checking whether the price makes sense. You didn't vote for SpaceX to be in your portfolio. You don't get a say in the timing, the price, or the risk. If SpaceX qualifies for inclusion in these indices, and analysts widely expect it will, then within a relatively short window, index funds holding trillions of dollars in collective assets will be required to buy shares near whatever price the market has decided is fair, regardless of what a DCF model or a Morningstar analyst thinks. Your retirement account becomes the buyer of last resort for a company one respected research firm just said is trading at nearly double its actual value. And this isn't a hypothetical squeezed into some distant future. This is happening in real time, in the exact window we're living through right now. SpaceX's debut already reshaped the entire sector around it in a matter of days. Smaller space and satellite stocks moved sharply just from the gravity of this one listing, which tells you how much weight this single company now carries across the market. It also isn't happening in isolation. Reports have confirmed that Anthropic and OpenAI have both confidentially filed to go public as well, meaning SpaceX isn't the outlier here. It's the template. The company that tests how far a narrative-driven valuation can stretch before the index machinery locks it into everyone's portfolio, quietly setting the pattern for the AI giants lining up behind it. So let's be honest about what's actually happening here, because the honest version doesn't make for as clean a headline as biggest IPO in history. The clean version is easy. A legendary founder takes his most ambitious company public, and everyday investors finally get a seat at the table. The real version is messier. It's a business where one segment is genuinely excellent, one is stable but unspectacular, and one is a resource-hungry AI lab bolted on right before the public offering, all wrapped into a single valuation that some of the most respected analysts in the industry think is inflated by close to half. And it's a valuation that doesn't need retail investors to believe in it individually, because the market's own plumbing will do the buying automatically. This is what changes everything actually means. Not that SpaceX going public is bad, or that the technology isn't real, or that Starlink isn't a genuine achievement. It is. What changes is the relationship between you and the market. For decades, the pitch was that passive investing removed emotion and speculation from your financial future. What this moment reveals is that it didn't remove speculation. It just moved the speculation upstream into boardrooms and index committees and left you holding the outcome without ever being asked whether you wanted in. So here's the corrected version of the story. SpaceX isn't simply the biggest IPO in history. It's a live demonstration of how modern markets decide what you own, using a mechanism built to feel automatic and safe, precisely because almost nobody stops to look at how it actually works. Somewhere in the next few months, if the pattern holds the way it usually does, a piece of this company is going to land in your retirement account, not because you chose it, because the system was built to choose it for you. And whether that turns out to be the best investment of your life or the most expensive lesson in how passive investing actually works, you won't find out by reading the headline. You'll only find out by understanding the machine underneath it, which is exactly why stories like this one deserve more attention than they get, and exactly why it's worth sticking around for the next one.